our focused Brexit podcast tonight. Thanks very much for joining us at 7 o'clock on a Thursday evening. So my name is David Layden. I'm head of food and agribusiness with Ifac. Suppose to begin with a little bit of context. We know there's no such thing as a good Brexit. We've known this since 2016. The long-term implications are negative. They're negative for all Irish farmers, even if a deal is put in place. There will be supports, as many of you saw on the front page of the Farmers Journal today, but again, supports only last so long. Tonight, though, we really want to get into the nuts and bolts of Brexit for farmers who are trading with either Northern Ireland or with Great Britain. So we look at some scenarios, and hopefully after 30 minutes, you'll be better informed. I suppose our key message is, whether there's a deal or no deal, there will be customs and VAT implications that farmers have to deal with if you're trading with Northern Ireland or the UK, or potentially not with Northern Ireland, as we find out. So, firstly tonight, delighted to be joined by my own colleagues, Declan McAvoy, our head of tax, and he's going to work with us on the VAT side of it. Andrew Bolly, our senior accountant in Donegal on customs. I'm really delighted to be joined by Bertie Troy. He's the managing director of GrassTech. Among a lot of things that they do for Irish farmers, they do import and export livestock. So firstly, we're going to take a few examples, and I'm going to work with Andrew and Declan through a couple of examples, and then we're going to go and have a chat with Bert. So, gents, I'm a farmer in the Republic of Ireland, and I want to purchase a tractor from a Northern Ireland dealer. Andrew, customs implications if I'm a farmer buying a tractor from Northern Ireland.
Hi, David. From Northern Ireland, there will be no changes, so it'll stay exactly the same.
Declan, any VAT implications?
No, from, again, Northern Ireland is still regarded as staying within the EU, so it's regarded as an intra-EU acquisition, so no changes there.
Okay, that's positive. So we can still go to the north, buy a tractor, buy a piece of machinery, and no implications if that's something that we wish to do. Moving on to maybe something a little bit more complicated, we want to go across to a British farmer in Great Britain, nice tidy tractor. We want to purchase that tractor and bring it back to the Republic. Is it more complicated than it was pre-Brexit? And what are those customs implications? I'll start with you, Andrew.
Yeah, so I suppose things are going to change a little, David. The first thing is to make sure that you have your EIRE number, and you can make sure that you have that by contacting your accountant and having a chat with them. The second is you must be registered with the Department of Agriculture. So make sure that you're registered onto the Traces NT system. So before you buy a tractor in Great Britain, make sure you have those two things done. So essentially the process for taking a used tractor over from Great Britain, 24 hours before you actually take it over, you'll need to register a pre-notification on the Traces system. And that'll be part one of the shed. So this is basically a health entry document. Then for the actual transfer of the tractor from Great Britain over to Ireland, you must have your customs declaration completed. And you will also need to have a phytosanitary cert. Now that cert basically is covering the tractor. So it's because the tractor has been used, it's been exposed to elements over in Great Britain. So you need that certificate to accompany the tractor before you can take it over.
So Andrew, are you telling me that even if it's not an animal or a feedstuff, there's still phytosanitary implications if it's a second-hand machine?
There are. So you need to make sure that you have that certificate before you take the tractor over. And I suppose the final thing that can hold things up, and it's worth bearing in mind, there will be physical checks at the border posts. So just bear that in mind. It may cost some time and it could cost some money.
Okay, and there's another document there, the single administrative document. I think it's aptly named. It's a SAD document. I think there's 54 pieces of information needed in that SAD document. If a farmer wants to do this piece of business himself, does he need to fill in the SAD document?
Yeah, so that's the customs declaration form that I was talking about. And essentially, to get that form filled out, you either need to have the required software to do it yourself, and the training, because there's quite a few codes, or you need to get a customs agent, and a customs agent will charge typically between 45 and 75 euros per declaration. So you need to factor that in as well.
Okay, so EIRE number has to be in place. We have to be familiar with traces, with the shed document, the SAD document. there's quite a bit of complication there.
There is. I suppose for anyone that will be moving machinery from Great Britain over to Ireland on a common occurrence, I suppose they'll get used to it very quickly. But for someone who's just buying a tractor every 3 or 4 years, or maybe even further afield, it's probably a daunting.
Mightn't be the most sensible thing to try and do on your own, let's be honest.
No.
Okay, Declan, VAT implications. Same thing, find the tractor in GB.
Yeah, this is where the big change comes. GB have left the EU. So as a result of it, they're now this third country. So we are importing from a third country. So as a result of it, GB is exporting. So whether you're registered or not, suddenly when the tractor lands here, there's VAT at the point of entry. So you're an ordinary farmer bringing it in, there's VAT at the point of entry for you, with VAT payable up front immediately. Previously, it was paid in the UK, now it's paid here. Secondly, then what happens if you're buying from a registered and you're registered here yourself, it's the same, it's VAT at the point of entry. For registered dealers, they have the option of looking at the deferred accounting and deferring the payment until the 15th of the next month. But the registered person can claim the VAT back in their next VAT return. So there's options for the registered guys, provided they actually set themselves up. The difficulty is, it's doubtful whether a farmer registered for VAT is going to go through and apply for the deferred accounting for VAT, because the rules are very, very high. And that's so on a one-off transaction, doubtful. And what's happening there, it's a cash flow impact immediately. And what Andrew was talking about, the customs, VAT is on top of any customs and excise costs. So suddenly, if you're looking at a tractor today, say of 20,000, and there's 10,000 of VAT, of customs and excise going forward, you're looking at VAT on 30,000. So a significant cost.
Okay. So for a regular farmer who's used to maybe going across the GB and purchasing a machine, the world has got a lot more complicated for that farmer at this stage.
Yes, yeah. And cash flow expensive initially.
Okay. Our second example is, and we're just taking examples to highlight what it could look like, an Irish farmer going to Dungannon Mart to purchase a bull, to purchase a stock bull for his own farm. The customs implications of going to Dungannon and buying that bull, Andrew.
Again, David, much like the used tractor, there will be no change. So from a customs point of view, Northern Ireland is deemed to be in Europe for customs.
Okay, thank you. So Declan, I presume that's the same on the VAT. You can still go to Dungannon Mart, purchase your bull like you've always purchased them, and move on.
No difference, absolutely none.
Okay, now you fancy a bull over in Stirling, nice Angus bull over in Stirling, you head across up to Scotland, you purchase your bull, you're bringing the bull back. Talk to me about the implications for that, Andrew.
Yeah, so unfortunately, the purchase of a bull over in Scotland or England or Wales, it's going to be much like your used tractor. So first of all, make sure that you have your EIRE number. Second of all, make sure that you're registered with the Department of Agriculture on the Traces NT system. And really, like the used tractor, the process is going to be much the same. 24 hours beforehand, you will have to register a pre-notification, and you'll be issued with Part 1 of the shed. Again, that's your health entry document. Then you'll have your customs declaration or your SAD document. The big difference, I suppose, between the tractor and taking over a bull is that with a bull, you need to have the Great British Health Certificate with the bull to take it into Ireland. And again, you need to factor in that there will be physical checks at the customs border post.
Okay, and I think, Bertie, you're going to talk a little bit about the health certificates in due course. Declan, VAT implications buying that bull?
Yeah, again, a third country. So as a result of it, VAT at the point of entry here into Ireland, the VAT for livestock is 4.8%. So it depends whether you're registered or unregistered and your ability to reclaim same. So again, cash flow. Again, down to pure cash flow disadvantage. Yeah.
Okay. And Andrew, just a quick one there. You head over to Charlie Country in France, you buy a lovely big bull, you're bringing them home via the land bridge though, so you're not coming across on a ferry, you're coming home via the land bridge. Implications?
David, just get on the ferry from France to Cork. It is a lot more complicated and there's a lot of paperwork. So the first thing you're going to have to do to get the bull from France over into Great Britain, you're going to have to go onto the traces system and register the shed part 1 again. Then your transport operator has to get involved. And this is really going to be key. You need to have a transport operator that is set up. So preferably with AEO status, and that is that they're an authorized economic operator, because they're going to have to attain an MRN number, a movement reference number, and they're also going to have to file a PBN, so a pre-boarding notification. And all of this has to be done before you get to Great Britain. So they've got all that to do. Then you get over to Great Britain, there's going to be physical checks at the border posts. They're going to check all the documentation, and then they need to log back in again onto the traces system. And they need to do the next part of the journey, which is from Great Britain over to Ireland. And again, before you get to Ireland, or whenever you get into Ireland, you're going to have physical checks again. What is key is that every single document has to accompany the livestock from France into Great Britain over to Ireland. So your MRN, your PBN, your shed, your health certs, all of that there have to be there. Otherwise, you're going to incur delays.
All of this is added cost, like added cost for a farmer, added complication, added bureaucracy, and for any food and agribusiness. And we had a food and agribusiness webinar earlier in the week, and really that's the key thing. There is added cost at all stages here. We'll go finally to a third scenario, which is where we're selling dairy heifers to Northern Ireland, our dairy heifers to Great Britain. So we'll start with, we're selling our dairy heifers, or some livestock, up to Northern Ireland. Andrew, any implications?
No, like before, there will be nothing extra. Whenever it comes to Northern Ireland, it's going to stay much the same.
And Declan, that's the same for VAT.
Yeah, it's the two scenarios. You're either selling to a registered farmer in the north, and if you are, no Northern Ireland VAT, provided you get his VAT number and he self-accounts for VAT, and you're selling to an unregistered farmer, it's an intra-EU dispatch, you charge the 4.8% as if you're doing it down here. No change.
Okay. Now, dairy heifers to GB, and this will be of particular interest to Bertie, who does quite a bit of that type of business. So we're selling dairy heifers to Great Britain. Andrew, customs implications?
Yeah, so I suppose if you are going to be selling over to Great Britain, you need to make sure that you have a GB EIRE number. It's not as complicated as you'd think. You go onto HMRC, you can register, give your Irish VAT number and all your details, and they will issue you with an EIRE number. It's worth bearing in mind that Great Britain have their own version of the traces system as well. So you will need to lodge certain pre-notifications there before the livestock leaves Ireland to go over to Great Britain, and make sure that you have the health certificates in place before they're exported. Just like an import, you're going to have to fill out an export declaration. The one good thing about this is that the export declaration is a lot shorter than the import one. And I suppose the final thing that you really need to consider are the terms of delivery or supply. Be careful what you agree to, because if you agree to DDP with certain products, that means that you're responsible for all the import paperwork over in GB as well. So just be careful on the terms of delivery.
Okay. Declan, VAT and duty implications?
Yeah, again, third country, the UK. So as a result of it, no VAT on exports from Ireland, VAT at the point of entry going into the UK. And you may have to register for VAT in the UK if your turnover exceeds 85,000 sterling. So that's the implication. So if it's part of a trading business, the farmer selling a few, no difficulty. A business doing it will have to register for UK VAT. Yeah.
So look, the reality is, from the summary you guys have given there of the implications on different ways to trade with GB, it's all getting much, much more complicated than it ever was, and possibly too complicated if you're only doing a nod transaction going over and back. And I guess that's where, Bertie, where you come in to segue straight to you. Tell us a little bit about the business, what you do, and then we get into Brexit.
So, David, we're based in Mallow in County Cork, where we provide a number of services to the agricultural sector, both in Ireland and the UK. So we're involved with the design of grazing infrastructure and farmyards across the country. We also distribute Trimble Precision Agricultural Solutions. And I suppose one of the biggest part of our business is the trading of livestock across Ireland and into the UK, and a small bit to France as well, predominantly dairy livestock.
Okay, implications of Brexit. What are you guys, and I know you're part of an importer and exporter association, what are you guys seeing? What implications do you guys see for your business?
I think the implications are twofold. I suppose the bigger implication is a no deal scenario. If we get to a no deal scenario, so there's bigger implications for that. So I suppose for exporters, it would be primarily around sterling. The value of sterling will drop until we go to parity. Our customers will have less buying power, so I think they probably will step back from buying anything. In a deal scenario, I think things will run as we would hope pretty well. But a no deal scenario will create chaos for the whole export industry.
Bertie, have you clarity on the impacts and on the increased levels of declarations you're going to have to make, the increased bureaucracy that's involved with dealing with GB? Are you clear now? And you guys are in the thick of it. So where some of us mightn't be in the thick of it, you guys definitely are in the thick of it, because come January, you'll be dealing over and back with GB. Have ye clarity at this moment?
I suppose you never have enough clarity, David, on it. And day by day, I suppose it is improving. Maybe, and a lot of the issues are on the UK side, where maybe information wasn't forthcoming. Possibly they don't know fully themselves. But in fairness, the department here will be doing the best they can with it. I suppose the UK come the 1st of January will be no longer part of the EU traces system. So I suppose when we export livestock, whenever livestock cross a border, they're notified on the traces system. It's a really efficient process. So obviously on the 1st of January, the UK will no longer be beyond that. So there will be 48 hours notice required to the UK authorities of what animals are arriving, say. So look, yes, it's not as efficient as what's there at the moment. It could be a lot worse, and we'll just have to make it work.
For a farmer listening this evening that does a little bit of business with GB, in terms of livestock purchasing or selling to GB, what advice would you have for him tonight? Obviously, maybe work with Grass Tech or another exporter, but other than that piece of advice, what pieces of advice would you have?
Look, I think short term there could be maybe a slowdown in trade, but medium term, I suppose, like historically, the UK has always been a net importer of cows. There's something like 30,000 cows a year have to be imported into the UK to maintain numbers. So they always have been an importer. They will continue to be an importer. So the current markets that we get, or say the UK farmer gets cows from, mainland Europe and Ireland, there's nowhere else suitable to supply it. So, in a no deal scenario, I would say you could 3 to 6 months. The trade could stop or very much slow down. In a deal scenario, I would hope that it would continue as normal, and people will have that outlet to export to the UK, which has been a good outlet for people.
Yeah, no, definitely an important outlet. Declan, some of your final thoughts around this matter.
Yeah, a strange thing, if you're doing business with the UK, because it's a third country, and I said it before, and HMRC website and the amount of information on the HMRC website in relation to VAT and in relation to Brexit, it's incredible. Very simple, very easy to understand, and that will help you. There is going to be vast uncertainty around it, and also this extra cost. And as you said, David, there earlier, one of the things that could happen on this is the guy doing the one-off transaction may be discouraged from it because it's brand new. If he makes a mistake, it could be a big hit to him. The likes of Bertie or those companies or guys that are doing it, regularly, say some of the machinery or tractor importers, no difficulty whatsoever.
Okay. Andrew, couple of your top tips for anybody that wants to take on the challenge of exporting or importing from GB come January of next?
Yeah, David, I suppose first, is the basics. So make sure you have your EIRE number. So speak to your accountant, make sure that's in place. Make sure you're registered with the Department of Agriculture and for the Traces NT system. If you are going to be, I suppose, importing or exporting livestock or machinery or whatever it might be, make sure you speak to your transport operator. Make sure that they have AEO, because it will mean that they're trusted. It'll mean that the whole process is faster, and it will mean less checks. And if you are going to be importing or exporting, make sure that you have your account set up to pay any charges for the customs, so that you can top up through revenue and everything else. And finally, I suppose for anyone who is interested, there is a free course with SkillNet, and that will equip you to be able to fill out these declarations.
Are you honestly advising customers and clients of Ifac, farmers, to go and do a SkillNet's course on customs, Andrew?
Probably easier to get an agent, but if you're sad like me, you'll probably do the course.
Okay, no, we're glad that you're taking the course. Bertie, any final comments as we head into 2021?
No, look, I suppose, everyone is hoping that there will be a deal scenario, David. The UK have been a huge market for Ireland for years, and hopefully that will continue, and that sense will prevail in the next few days, So this time last week, it looked a lot worse than what it is this week. So hopefully politicians will do the right thing and get this deal over the line.
Yeah, we echo those sentiments. I suppose, folks, we're going to do more of these short, sharp webinars as clarity increases on Brexit, especially in the early weeks of January of next year, to make sure that, Ifac clients, you're up to date on the practicalities of what it means for your business. I'd really like to thank all our participants tonight, particularly my own colleagues, Declan and Andrew, and of course you, Bertie, and thanks for joining us from Grass Tech, to my own colleagues, Noreen and Niamh. It's going to be a difficult and a very turbulent time at the start of next year, where Ifac will be there to work with you through that period. And I suppose at this stage, all that's left to say is really good night, and we wish you a very peaceful and enjoyable Christmas. And we'll be back in touch in the first week of the new year with a few more short, sharp webinars about the implications of Brexit. Thank you.